Hi, this is Shaheedah Hill, the Real Realtor, getting you over the hill to home ownership. As promised, I'm going over closing costs today. Now, closing costs are additional costs, not your down payment. Down payment is what's going to go toward the purchase of the home. It comes off of the loan amount. But closing costs are additional fees that you have to pay that go with the closing process. Okay, so I've detailed each one of them. These are closing costs for an FHA loan, and in general, you can estimate about 3% of the sales price of the home for closing costs in general. But they do vary. Your state is going to be different because I'm going to tell you why. Your state may vary. The price of your home, of course, may be different. The loan amount will affect it as well. So I'm going to give you the typical closing costs that you're likely to see when you're buying a home, and stay till the end because I'm going to tell you how to save on those closing costs. So I have my water. This is going to be a long one, but stick with me. You will learn something. Put any questions in the comments and I'll be sure to answer it. So let's get into it. Number one, so I put them all in different colors, but number one are loan fees. So loan fees are things that the lender is going to charge you to close this loan. Okay, so the lender has to make money, and they are there, and they're going to make sure they get their money at closing, and the interest that they're going to charge you over the years. But they're going to get some money from you at closing, and these are the typical loan fees that are included. Okay, so number one is origination. Origination is them originating the loan, basically just opening the loan for you. Basically, it's just a lender fee. It's generally 1% of the loan amount. The loan that we're using is FHA, and I did a house at $222,000. So I did a house at $222,000. The payment for this house was about $1,497, I believe. So that's your monthly payment, but these are your closing costs. So it's very important. It's FHA. The home price is $222,000, and we'll go from there. So origination is generally 1% of the loan amount, 1%. And when you're getting a loan, you'll get a loan estimate, and all of these fees will be on your loan estimate. So you need to look at it very carefully to know exactly what fees you're going to be required to pay at closing. Now, the estimate cannot vary that drastically from the final disclosure statement. So by law, they're required to give you a final version of the estimate. It's called a closing disclosure at least 3 days prior to your closing. So you'll know with the estimate how much you are going to have to bring to close and how much money. And you'll also know what all the estimates are. If the estimate and the closing disclosure vary too much, it's really against the law, and it's different, but they can't tell you one price when you did the estimate. You go through the loan, and then when you get to closing, it's like $5,000 more. Okay, so the estimate and the closing disclosure should be very, very similar. So let's go back to it. So origination fee for this loan is $2,142. A doc review, they're reviewing your documents, $315. Loan processing, $300. Underwriting, $375. So everything that they have to do to process your loan, them looking at your financial statements, making sure that everything that they see, all the documents, everything they're doing with the contract, they are charging you for that. And these are some of the fees. The fees vary. That's why I suggest you get you go to 3 different lenders when you're shopping for your loan. Then you can see some people might have high fees, some people may have low fees. You can figure out which one is going to be the best interest rate and the best closing cost for you. So there are more fees. Next is your appraisal fee. You pay for your appraisal that the lender is going to do on your home. So for this one, it was $525. Hi, taking a short break. Please like this video, subscribe to my channel for new videos every week. Flood certification fee, this is only $13.50, but they're going to make sure your home does not require flood insurance. So they charge you a fee for that. Mortgage insurance premium. when you're getting an FHA loan, there's a mortgage insurance premium that needs to be paid. It is 1.75% of your loan amount. Now, I put a star by this because you can finance your mortgage insurance premium. We're going to talk about that later. So you can roll your mortgage insurance premium into your loan, because that's a significant percentage, and that's going to bring your closing costs much higher, because again, it's 1.75% of your loan. So mortgage insurance premium for this house was $3,749. All right, now this is my third and last. Title. So what's a title? That means the person that is selling you this house owns the house. They have the legal right to sell it to you. Now, because a lot of times, depending on the age of the house, it may have transferred ownership a lot of different times. So title insurance is important for you to have, just in case one of those transactions wasn't executed properly. Let me give you an example. A seller dies, okay? A seller dies and they have no will. They leave their home to their children, or their children are the next in line to get the house. Now, most of the children live in the state. They go ahead, say there's 4 kids that live in the state. They split up all the proceeds. Maybe there's a 5th child that didn't even know mom died, didn't know what happened, didn't know all the money was split. They find out later, mom died, left them the house, and he didn't get any of it. He can go back and sue, and he may still have a property ownership right in the house that you bought. Now, it happens very rarely, but it's important for you to have title insurance. Now, it's important for the lender to have it too, because if you stop paying them, they're going to take back your house as collateral. So they're going to make sure that that house has the right insurance, is paying their taxes, all of those things. So they're going to have you pay for their title insurance, or your title search. They're going to have you pay for their title insurance, all as part of your closing costs. So this is kind of a big one. You have the title letter, that's $35. Lender's policy, that's the lender's title policy, $540. Settlement of the title, $595. And then the title exam, $200. Okay? Those are all your loan fees. And we're going to get into some totals. But again, in the comments, you have any questions about the loan fees? Let me know. I think I'm going to need some more water. So let's go to the next one. And hopefully you can see everything okay. If not, just let me know. We're going to taxes. Taxes. Because the government must be paid. The city government and usually the state government, depending on your state, it may vary in amount, but there will be some taxes that you have to pay as part of this sale. So there's a recording fee, because now you have to be recorded in your state or in your city or in your county that you are the owner of this home. So there's a recording fee. For this closing was $95. I'm actually going to move this over a little bit. For this closing was $95. The transfer tax, because they're going to tax you from transferring it from one owner to another owner, was $232. And the state tax was $644. These are all percentages, so it's going to vary based on how much your house costs. Remember, this house cost is $222,000, okay? And it's an FHA loan. Taxes generally, regardless of loan type, will remain consistent, okay? And the third type of closing costs are prepaids and escrows. So prepaids and escrows. Now, prepaids are something that you're going to pay up front, and they're going to either save it for you, and I'll go through some examples, but you're prepaying for certain things, or the lender is holding it for you, waiting to pay it out for you. So those are taxes and insurance for the most part, okay? So when you have homeowners insurance, so you get homeowners insurance just in case your house burns down, you have an earthquake, tornado, God forbid, something happens, you have to have homeowners insurance on your property, especially if you have a loan attached to it, right? So they're going to make you pay, whether you get in Geico, Progressive, whoever your insurance company is for your house, they're going to have you pay 1 year premium up front. So for this house, the premium for 1 year was $1,342. Also, you have prepaid interest. In another video, so if you haven't seen my videos on the cost to buy a house, you are going to skip a month. So if you close, for example, you close in January, you do not pay your first mortgage payment until March. So whatever month you close in, your first payment is not due until 2 months from that time. So you close in January, you skip February, your first payment is due in March. However, when you close in January, they're going to make you pay the interest on the loan, okay? So they're going to make you pay the interest. So depending on when you close, you may have, several days of interest. You may just have, say you close at the end of the month, you may only have a couple of days of interest. So for this example, they have prepaid interest of $194, okay? I think they might have closed in the earlier part of the month, okay? So prepaid interest was $194 for the loan. Now you have your homeowner's insurance that is going to be paid up front to the lender. So the lender doesn't want to start out at zero. They want to have some money in the bank to pay for your insurance just in case. So say you buy this house and first month or whenever your first payment is due, you don't make it. Maybe you lost your job. Maybe something happens. They can still have the money in escrow to pay your homeowner's insurance. So they're going to pay, when they escrow, they pay for you. Unless you have a lot of equity, generally 20% or more, depending on the lender, they pay your homeowner's insurance and your taxes out of your mortgage payments. They don't trust you to pay your insurance every month. They don't trust you to pay your taxes. And they need to make sure if they ever have to foreclose on you, then your taxes are up to date and your homeowner's insurance is up to date. Because if they foreclose and then there's a fire, or even before they foreclose, say you stop paying them and there's a fire and your insurance lapsed, then they don't have an asset to collect. They have no collateral if that house gets damaged. So they're going to make sure those payments are paid. So they're going to put some money, because you haven't made any payments yet, they're going to put some months in escrow so they have that money to pay. Now, when you sell your house, they'll refund that money. If there's money left in escrow that they were holding for you or that you prepaid, they will pay that money back. But until you sell it, that money's going to stay, or until you have significant equity, if you're doing like a conventional loan, that money's going to stay, okay? So they want, this lender wanted 3 months of homeowner's insurance premiums, so they wanted $335. They also wanted 3 months of property taxes. That was $1,121. This also had this other little fees. This community, for this closing, had an HOA, so a homeowners association, to pay for the pool, the tennis courts, any other amenities in the subdivision. So they had an initiation fee, and sometimes you'll see that if you have a homeowners association, to join the association, which you don't have a choice to join or not join in most associations, if you buy a house, you have to join in that subdivision, you have to join. So the initiation fee for this one was $250. And then lastly, your owner's title insurance. In the loan fees, you paid for the lender's title insurance, but you need to cover yourself as well, so you buy your own title insurance policy. Now, you can shop around for some of these things, like the title insurance and that sort of thing. Most people don't do it because it's an inconvenience, and they're not generally going to save that much shopping around, but you can shop around for some of these items, and it will be starred on your closing cost, on your estimate from the lender. It'll say the buyer is able to shop around for these items. So you can, before you close, you can shop around and see if you can find a lower rate somewhere else. Now, I told you I'm going to tell you the totals and how to save. So let's add up all of this. And I did all these papers. I figured it'd be faster than me having to write it all up. So the total closing cost for this loan, don't have a heart attack, I'm going to tell you how it's paid. The total closing cost for this loan was $13,525.50. Remember, we had that, it was a flood certification, that was $1,350. Was $13,525. Now, this is if you didn't finance that FHA 1.75% mortgage insurance premium. You would have to pay all of this. The majority of borrowers finance that in with the loan. So the actual closing costs were $9,776.50. Now, what's great about closing costs, these are savings. Not what's great about them, but some good news, okay, is that the seller is allowed to contribute to your closing costs. And that's why agents are so important, because they're going to negotiate in most cases, especially for first-time buyers that don't have a lot of savings. They're going to negotiate that the seller pay some of the closing costs, because the seller cannot contribute to your down payment, but they can contribute. They can pay all your closing costs in a lot of cases. You may have to pay some of your prepaids, but they can pay a significant portion of your closing costs. So for this example, let me get my other paper, and I'm going to get some water. So for this example, the seller paid, let's cross this out. The seller paid, I'm going to take this off. So it was $9,776. The seller paid $6,600. So that left the buyer to finance $3,176 in closing costs. Now, this is much easier than this amount. Now, so in that, but it doesn't include your down payment. So the seller had to do their 3.5, this FHA loan, they had to do their 3.5% down payment plus this, okay, to cover the closing costs, because after the seller contributed the $6,600, and that gets credit to them. So if they're making money from the sale, they'll just take some of their earnings and they will put it to the buyer to help them with their closing costs. Now, I'm going to give you several ways to save. Number one, make sure you're quoting with at least 3 different lenders. All lenders have different fees. You should also quote with a credit union. So one of those 3 should be a credit union. Credit unions traditionally have the lowest closing costs, but that's not for certain depending on where you are. But you want to quote with 3 different people. In my earlier video, I said, once you get the 8 steps, watch that video, the 8 steps to home ownership, I said, make sure you quote with 3 different people and get organized first. Because if you're organized, when you apply for 1, you apply for the 2, you apply for 3, and then all of their estimates and all of their information comes back at once, so it's not that difficult. You're going to see who's going to give you the best interest rate. You're going to see who has the best closing costs. So you know that, if you have limited funds as a first-time home buyer, you want to make sure you're not spending extra money. Now, if you're doing down payment assistance, your lenders might be limited, but you still can shop around to see which lenders that participate in the program have the lowest closing costs. So I said number 1 was shopping around, getting at least 3 quotes. 1 is going to be a credit union. Even if you're not a member of the credit union, join. Like, open up an account and join. So that's number 1. Number 2 is, and I said this before, have the seller contribute to the closing costs. Now, the more competitive, the better the market is for sellers. If it's a seller's market, then they're less likely to give so much in closing costs. Now, another way around that is you can have them increase the price of the house a little bit if it could, if there's enough equity to do that and it'll appraise for that. They can increase the price of the house and then give you that money at closing. So that's one way around if they are refusing to give you that much in closing costs. Down payment assistance. Down payment assistance will cover one or the other or both. So sometimes you can get down payment assistance from your state to cover the down payment, and then you'll have to save to pay any of the closing costs. The more expensive the house, of course, the more expensive the closing costs, because some of these costs are by percent of the loan amount. So just be mindful of that. But down payment assistance will help you cover some of this. I have one client, I'm in Georgia, if y'all don't know yet. I'm in Georgia, and I have one client that's only his total fees is about, they have the it's required $1,000 that he has to contribute. So $1,000 is the only thing I think that's it. He had to pay for his inspection and he had to pay for his appraisal fee. But other than that, he didn't have to do anything. So he's under $2,000 in total. They covered all of his closing costs and all of his down payment. All right, gift funds. So another way you can get some of this paid, some lenders and some loan types allow you to have gift funds. That means your grandmother, your mother, somebody else who has some money, maybe you're getting married and that's one of their gifts to you. Maybe they're going to be living with you or something like that. They don't have to be on the loan, but they can gift you some of the down payment, or they can gift you some of the closing costs. And lastly, once you try to do all of those things, you have to save. If you didn't watch my video, how to save for a down payment fast, save your money. Go on a spending freeze until you get, I remember when my husband and I were saving up for our down payment, I estimated that we needed to make sure we saved. I didn't know how much the seller would contribute. So I had to make sure that we had the closing costs and the down payment just in case. And so our computer was like really acting up. It was getting old. And I said, we're not buying a new computer. Print stuff at work on your computer at work, pay bills at work. Like our computer, I didn't just jump and go ahead and say, let's get a computer, because we had a goal to save. So every dime counted. So to spend $700, $800 on a computer, it wasn't part of the plan. So when you're really focused on saving, don't let anything stop you. Reach your goal, figure out what you need to do to get it done. Don't let any of this, even though it may be scary, people buy houses every single day and they're no different from you. They just figured out what to do, they implemented, and they did it. Thank you so much for watching. Please like and subscribe to my channel if you haven't already. Thank you for joining me, and join me next week for new videos every week.